Welcome back. I'm Pratap here. Today is 11th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note, we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course. Even then, we are providing complete free training, and all the training lessons are already available at our NeoStock YouTube channel. To access all the training lessons at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. I kept all the training lessons in this playlist. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions. I provided all my training instructions at our Telegram channel. So I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the Telegram channel top of the window, you can find pinned messages, and one of the pinned messages are having all the training instructions. So learn this course according to those training instructions. Then only you will become a very good independent trader in the coming months time period. So please make use of this opportunity. Now let's get into performance of the HLQ zone analysis. Previously we identified 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 high liquidity zones. So these out of these 10, today we got trades from 3 stocks. 1 is successful and 2 are stopped out. Before I explain these performance statistics of today's HLQ zone analysis, first let me make you give you some clarity about the power of the risk management we are applying in supply demand zone price action. It is very, very important, because I realized some of you are not properly understanding the risk management system, even though I gave the highest priority to the risk management in our training course. Let me show you the statistics. This April month, starting from 1st April, today 10th, first 10 days, we got 9 trades. I know it is very less compared to the previous statistics, but we know the current market situation. So globally, the whole market is impacted due to tariffs from the US government. So that is impacted all the countries. That is not only impacted the trade of all the countries, that is also impacted our HLQ zone performance. That is what I am trying to say. Why I am saying this point? Last 1.5 years, we have seen HLQ zone performance is excellent, even in critical days also. Even in bearish days, we got very good bullish trades, successful trades. In a bullish day, we got a very successful bearish trades. We have seen in budget days, we have seen elections declaration days, we have seen other disturbances in the economy of the global due to other reasons. None of them impacted our HLQ zone performance, but the tariffs from the US government also impacted our HLQ zone performance during this month. Because first 10 days we got only 9 trades. Out of 9, only 3 are successful. See, the successful, this is the today's trade, this is the previous trade, this is on 1st April. See how many stopped out trades we got. 1, 2, 3, 4, 5, 6. We got only 3 successful trades, but we got 6 stopped out trades. By seeing these statistics, generally what people will feel about this? Okay, we got heavy losses, only 3 successful trades, but 6 trades are stopped out. So definitely that person would have got huge losses. This is how people will be feeling, right? But understand here the beauty of our system, the beauty of supply demand zone price action risk management system. Does it give you losses? Let us see. If you consider all these trades starting from 1st April, this is the one, first one. Let me drag the mouse and Excel sheet automatically sum all these values. See here. What is the sum? 17,195 rupees profit it gave you. By excluding all these losses, still we got 17,000 rupees profit. So is it not the beauty of our supply demand zone price action risk management system? Apart from getting 6 losses, let us assume we have taken all the 9 stocks. Just assume, it is an assumption. If you would have taken all these 9 stocks, if you would have taken a trade, still it would have given you 17,000 rupees profit. That means the Trump's economic sanctions, does it really impacted our performance of HLQ zones? No, it still gave you profits. But our statistics are impacted. How? Because we are claiming 80% success rate. But 9 stocks, we got only 3 stocks successful. Of course, we have another 20 days trading session, another 20 more days are there left in this month. We may get more profits. That way, these statistics impact in the first 10 days may come down. But whatever it is, as on today, during the month April, the performance is very, very poor. Even then, we got the profit. Why we got such kind of profit? That is the beauty of supply demand zone price action. The risk management, clearly I mentioned, our risk should not be beyond 2% of our total value of our trade. You are planning a trade, whatever the value you are investing for the trade, your risk on the trade should not be beyond 2%. To manage within 2%, we have learned better statistics, fine-tuning the zone, fine-tuning the entry. That way we will always make sure our risk will be less than 2%. See how much excellent profit we would have got, 17,000 profit we got. Okay, even then, I want to take worst case scenarios. What is worst case? What is the out of these 3 profitable, which is having highest profit? This is the one, Hindustan Unilever and first, 12,825. I want to exclude that. I don't want to include. I want to assume, I want to take all the 6 stopped out trades. I'm taking only these 2 successful trades. And moreover, these 2 successful trades, we are calculated the profit only 1:3 RR. This is a very important lesson. Everybody please listen, especially the newcomers who recently completed the courses and started doing trading based on supply demand zones. Maybe you might be experienced person. Let us assume you are using supply demand zone price action concepts recently only. Listen carefully. See, why I excluded the first one? First one reached 15 minutes target zone, gave you 10.7 ROI. It gives a huge profit. Because of this profit, we may see the entire statistics got better statistics. That is the reason why I am eliminating this trade. I am considering the minimum profit is 1:3 RR. Previous trade on Wednesday, because Thursday is a holiday. On Wednesday, the last trading session, we got 1:3 RR trade we got. We got 4690 profit based on one futures margin cost. And today also we got a trade in Havels that we are going to discuss very soon. And this trade also gave you 1:3 RR. 7,575 profit it gave. I am considering only these 2 trades. And I am considering all the stopped out trades. See, this is the first stopped out trade. Second, first profit. Third, fourth stopped out. Second profit. 5th stopped out, 6th stopped out. I am considering all these things. I am excluding 12,825 in my calculations. So total how many trades? 8 trades. Because we are excluded the first one, 12,000 profit. Remaining are 8 trades. In these 8 trades, I am summing all these values. See, what is the sum? profit you got. How much profit? 4,370 rupees profit you got by excluding the first successful trade. I am not including this. I just excluded it. Now total trades you see, instead of 9, the count is showing only 8. Out of 8 trades, 6 are stopped out. You have taken only 2 trades. Those 2 trades also 1:3 RR only you considered. That means after reaching 1:3 RR, you booked your profit. Both the trades. Remaining trades, 6 trades are stopped out with stop buffer values, with ATR stop buffer values. Because all these values are calculated with ATR stop buffer values. So with the stop buffers, even then you got 4,370 rupees profit. You are in profit. In 10 days, out of 8 trades, 6 are stopped out. 2 are only 1:3 RR profit you booked. Even then you got the profit. That is the reason why I am always suggesting the beginners, don't look for 15 minutes target. Look for only 1:3 RR. Still you will be in profit. Why I am saying this profit? To reach, prices wants to reach 15 minutes target, lot of patience is required for you. Because prices won't move like a straight line till 15 minutes target. Lot of swings will be there. At the time you should properly calculate your trailing stop loss. Without trailing stop loss, expecting the trades up to 15 minutes target may not be successful every time. Of course, majority of the targets will reach 15 minutes target, but there are times stocks will be giving you good profit. It might be giving you 5% ROA it will give you. Intraday traders point of view, 2% ROA is very good ROA. But our HLQ zones may give you 5% ROA. Still we feel it is less. Why? Because our average intraday ROA is 6. After getting 5% ROA, price may not be reaching the 15 minutes target. Maybe some more price if it will reach 15 minutes target. Maybe you may get 6% or 7% ROA you may get. But all of a sudden, market dynamics are changed in the live market. Now prices are started coming down. From 5% ROA, your profit is reduced to 4%. Further it reduces to 3%. Further it reduces to 2%. Further it is reduced to 0%. And finally it stopped out. You got a stop loss with minus maybe 1.2 or 1.3% stop loss you got. Instead of booking the profit at 5%, you booked a loss with 1.3 negative ROA. Do you feel? Does it really make sense in this situation? If you are getting 5% profit, we lost. We didn't book the profit and finally booked the profit with loss. Does it really make sense? Does it makes us feel like we are good traders? No, right? That's why trailing stop loss will be helping you. After reaching, see, remember 2 points I am telling you today, important points. Either after reaching 1:3 RR, or you keep a minimum ROI. Maybe 4% is your minimum ROI. After reaching after reaching 4% ROI, still if you want to book your profit, blindly you book the profit at 4% ROI. No, you want to aim more percent. You want to aim for 6% or 7% ROI. Then what you do? Either after reaching 1:3 RR or after reaching 4% ROI, start implementing trailing stop. Initially use 1 minute trailing stop. If 5 minute zones are created, change from 1 minute trailing stop to 5 minutes trailing stop. And these stops, at least they should give you a minimum ROI or minimum 1:3 RR it should achieve. At the time you implement. If those trailing stops are violated, then you book whatever profit you got. Maybe you may get 3%, after booking you may get 3% ROI you may get. Okay, be happy with that. If the trade is stopped out, you will get minus 1.3% stop loss you will get. Instead of that, getting profit with 3% ROI is very good, right? So that's why you implement such kind of techniques. And if these techniques are in your favor, maybe price may reach up to 15 minutes target zone. At that time you may get even more profits. Never convert profitable trades into losses. Never do that. That is a real foolishness. When we get this problem, greediness. Greedy means, okay, we got 4% profit. You are looking for, I will get more. Okay, you got 5% profit you got. Still you are thinking, I want to get more profit. Now all of a sudden prices are started falling and give you loss means what? Instead of booking profit at 5% ROA, you booked your profit with minus 1.3% ROA. So as a beginner, my strict rule is, my sincere request is, follow a strict rule. What is a strict rule? Use only 1:3 RR in the initial stage. Because initially, building confidence on yourself is very, very important. If you lose confidence, you know what happens? You will be losing your entire interest on the trading. Whatever the concepts you learned all these days, whatever the effort you lost, everything is gone. Just because of our greediness. There are two reasons. The first reason is immaturity. Initial days we have a lot of immaturity in understanding the concepts in a perfect way. Second reason is greediness. Greediness means we want to gain more and more profits and we want to become rich in short period. All those things will never happen. Once you understand the market better way, then you understand how better you can capture. That kind of knowledge you will get automatically after you start trading for the first 6 months. First 6 months is very critical for any trader. That's why first 6 months you have to play safe game. Safe game means less profits, better success. If you want to get better success with less profits means it's not too less. Don't say it is too less. At least half of the profit what we are climbing, 6% is our average ROA. You climb for 3% only, or maybe 4%. Till 4% it is a decent. As a inexperienced person, as I am talking as an inexperienced person. That's why I always keep strict rule. Okay, first 6 months, I will book my profit at 1:3 RR. Once my experience grows, I will aim for more profits with the help of trailing stop loss. This is the way you keep some strict rules for yourself. Within 6 months, you make decent money. Once you make decent money, you have a lot of confidence on yourself. Even you lose some of that profits, you won't mind because you want to gain more experience. You want to do a lot of experiments with the profits you gain for the first 6 months with 1:3 RR. Some of the money you invest, experiment, get better control on the trailing stop. The initial stage, maybe even some of your profit margins hit, doesn't matter because your original capital is already there with you. Apart from that, you got some more extra profit in the first 6 months with safe trades. So next 6 months, you do a lot of experiments. Then you will become a true professional trader. From that time onwards, whatever the decisions you take, 80 to 90% of your decisions will be perfect. So follow these rules. See? I consider only 2 trades, 1:3 trades today and yesterday. I ignored the 10.7% successful huge profit trade. I completely ignored. I considered all the 6 stopped out trades. So total, by ignoring the first one, remaining 8 trades, we got 6 stopped out trades, 2 successful trades. Both the trades are only 1:3 RR. Still, you are in a profit. Still you are in a profit. How much? 4,370 rupees profit you got. And if you calculate the ROA by all these things, you got 3.7 ROA you got. All together. Total profit and profits and negatives together. Think from the profit point of view. Still you got 4,370 rupees. You may feel, okay, this is a less profit. Yes, less profit only, but how many stopped out trades you managed during this period, these 10 days? Worst market situation, you did the trading and still you are in profit. Worst market situation, people get heavy losses. See, if you open the television, they are saying like 5 lakh crore rupee capital is gone from the market. That is how news readers are every day they are talking. Today, 5,000 crores market capital is evaporated from our market. That is how they are making statements. But is your capital is evaporated from your market? No. Still you are in profit. You are a profit 4,370 rupees. You protected all your capital. Apart from that, you got some profit you got. Worst case scenario, you can say you are in break-even situation. When people are losing money, still you are in break-even. Who made you such kind of getting better situation, such kind of better situation when everybody is experiencing worst in the market? It is the risk management. The risk management we applied in our supply demand zone price action. That is the beauty of the supply demand zone price action theory, risk management. Simply I can keep the heading, the beauty of our risk management system. Understand this. This is what I am trying to tell to each and everyone for all these days. But now we got best data to demonstrate how better we are in compared to the other people. We didn't stop trading. Some people, what is the problem? You get one trade stopped out. Immediately you run away from the market. See, today let us assume first you took Reliance trade stopped out. If you run away from the market, you might have missed Havells trade that gave you 1:3 RR, good trade opportunity. Don't run away from the market when a trade is stopped out. Maybe the other stocks you may get trade opportunities and you may recover your losses, and that might be putting you into a profitable situation. This is the kind of mindset every trader should build. If you don't build such kind of mindset, always we will be out of our trading system. We should not fear. Why we should not fear? Because we have such a beautiful risk management system. We developed that is what I demonstrated now. With 6 losses and 2 profits, still we got 4,370 rupees profit we got. Worst case scenario, I can say we are in the break-even situation. Maybe some of the taxes you might have paid, right? That also we should deduct, because in these calculations we are not deducting any taxes. Of course, they are small figures only. If you consider all the taxes, definitely in future's point of view, they may not be more than some 1,500 rupees. Still, you might be having another 3,000 or 2,500 rupees profit will be there, even after paying taxes also. Even then exclude that profit. Still we are in a break-even. We are not into the losses. Okay, we are not talking about the best market situation. We are seeing the most worst situation in the market. I don't think you see such kind of worst situation further in the markets. If you see any worst situation, it's definitely not below this. Even pandemic also you didn't see this kind of situation. Only one day market huge loss is there. After that again slowly it recovered from the bottom. But the last 10 days what is happening? One day some 500 points market going up, another day, next day maybe 1000 points it is going down, next day maybe 800 points up, maybe next day again 700 points down. This is the way up and downs are happening. When such kind of up and downs are happening, any technicals will fail, including our strategies also. In uncertain market, always remember this statement. In uncertainty, when market lot of uncertainty, technicals will fail. Even then, our supply demand zone price action concept does not let you into losses because of the risk management system. And of course, our high liquidity zone strategy. Because the zone that we get profit, we get very decent profits. That one profit will make you recover from all the previous losses. Imagine 6 stocks stopped out, 2 stocks profit, that too only 1:3 RR. Still we are in profit. So this is a very, very important point. That's why at least 5 to 6 times I repeated this point. Then you understand how important it is going to be. If you keep this point in your mind, then without disturbance, you will be doing your trading. That way you control your emotions. That way you will never get into the losses. If you get disturbed for 1 stop loss or 2 stop loss or 3 stop losses, you never be getting happiness and you won't be able to concentrate on the market. You will be missing good trade opportunities. See, today, because of previous day, 2 trades are stopped out. Let us assume you didn't take any opportunities today. See, today, even though 2 more trades are stopped out, 1 trade that recovered all these losses. See, let me sum all. We got 4 losses, 1 profit. Still, you would have got 2,660 rupees profit. Let us assume these 2. Friday profit I ignored. Wednesday profit I ignored. Wednesday 2 stop losses I considered. Today profit and today's 2 stop losses. If I consider all, so that means out of 6 trades, 1, 2, 3, 4, 5, out of 5 trades, 4 are stopped out, only 1 is successful. See again, let me tell you, out of 5 trades, 4 are stopped out, only 1 is successful. That successful also only 1:3 are a trade. See how much profit you got? 2,660 rupees profit you got. Out of 5, 4 are stopped out. Only 1 successful. And these kind of things you see in the worst situation in the market. Best situation, what is it you see in all these days? 5 trades are triggered. All 5 are successful trades. Maybe 4 are successful, 1 is stopped out. These are the statistics we have seen in HLQ zone analysis videos all these days. First time you have seen 5 stocks, 4 are stopped out, only 1 is successful. Even then you are in profit. Even then you are in profit. See here, we are in profit. 2,660 rupees profit out of 5 trades. 4 stopped out. Why? What is the reason? Because of the risk management we are applying in our system. So that's why focus more on the risk management. The biggest problem is some of you I have seen you are not using properly the risk management. You are accepting 3%, 4% risk also. Thinking that, okay, my trades won't stop out. I get profit. Even the risk is for 5% also, no problem. Anyway, it won't stop out. I get profit. Don't think like that. There are times you see bad situation in the market. Best example is this month, the first 10 days during this month. Worst situation in the market. Worst performance in our HLQ zones. I'm saying worst performance in our HLQ zones. That way what will happen? Your risk management will impact if you don't bother about why always I'm concerning about the risk. That you will understand in this example what I explained today. I already explained, and again, 2nd time, 3rd time, 4th time also I'm explaining why. Because I want to inject these points into your mind. If you don't really understand the power of risk management, how do you apply these concepts in future in your tradings? Please understand why strictly we are following risk management. Maybe you are first time seeing the market, but we've been seeing the market for the last 20 years. We know what will happen in the best situation. We know what will happen in the worst situation. Considering both only, we explain the concepts to you. You have seen the best. You haven't experienced the worst. Always you think the best will happen in the market. Then you will be wrong. The day when worst happens, we all will get caught. That's why risk management is important. Hope you got it. Hope you won't make these mistakes, especially those who are not following the risk management strictly. Don't look for the shortcuts in stock market. Stock market with proper procedure only. Because I remember, I think yesterday or day before yesterday, one of the members said, no, I don't follow any of these risk reward and all. I want only 15 minutes targets. There only I want to book the profit. No, that is very wrong. There is no rule that every stock should reach 15 minutes target. That is the maximum target. Minimum is 1:3. That is what you have to understand. See how 1:3 saved you, put you into the profit. All these trades, only 2 trades with 1:3, still they gave you 4,370 rupees profit. Always if you think I want to go for 15 minutes target, it won't be possible. See, it did not reach 15 minutes target today, but still gave you 7,000 rupees profit. If you don't book at 1:3, you would have missed a very good stock, that instead of booking the profit, you might have booked it with loss, this stock. How you would have booked with loss, I will show you in the chart when I am explaining. Okay, now let's get into this. Havels. Havels is a 75 minutes high liquidity zone. Let me go to 75 minutes time frame. How our software identified this zone? Our software identified this zone as a drop one. Sorry, this is the one. Sorry, this is a daily zone, not 75 minutes. Havels is a daily zone. That is what I am wondering. Okay, this is a daily zone. Sorry, I am showing you 4 hour shot. Let me go to daily. This is the daily zone. Yeah, this is the daily zone, and we have drop candle. This is, see, hidden body. If you add the hidden body, this is the drop. This is a base candle. Medium size candle is also part of the base. Then drop candle. This is how our software identified this zone. Drop, base, drop. And this daily zone is fine tuned with 75 minutes time frame. So here we have a rally, 3 base candles and a drop. We have a 75 minute zone. This 75 minute zone is again fine tuned with 15 minutes time frame. In the 15 minutes time frame, you have 2 15-minute zones. This is the one, rally, base and a drop candle with hidden body, drop. And also here you have a rally, failed ERC rally, 2 base candles and a drop candle. These are the 2 15-minute zones. These 15-minute zones again fine tuned with 5 minutes time frame. Go to the 5 minutes and observe here. We have a drop candle, 2 base candles and a drop candle. And here one important learning is there. Everybody please concentrate. Actually I am supposed to draw a zone like this. Drop, base, drop. But I have drawn the zone up to here. Why? What is the reason? Because here you have a small pro gap. Many times what will happen? Prices just enter into the pro gap and then sharply go down. So that's the reason why I am filling my pro gap. You may ask a question here. Many stocks we have seen with the pro gap. Why we didn't draw the zone still the pro gap? Because of the risk management. Here the pro gap is very small. Just by adding the small gap, extending my zone is not impacting my risk management. If it is impacting my risk management beyond 2%, I would not have drawn this zone like this. Because the gap is very small, I don't want to miss the trade. Because many times gap they will enter and prices will come down. And because this gap is very, very small, so I want to take advantage of this gap. How I want to take the advantage from this gap? Just extending the zone up to the gap. Still it is not impacting my overall risk management. By adding that small gap, it is not impacting my risk management. If it would have impacted my risk management, I would not have considered, I repeat, I would not have considered that gap if the risk management is beyond 2%. Because it is within 2%, I am okay with that. So that is the reason why I have drawn the zone until the gap area. Okay, next. Here you have a rally, 1, 2, 3, 4 base candles and a drop candle. This is another fine-tuned 5-minute zone, but this zone is tested zone. Because it is a tested zone, I don't want to plan a trade in this zone. Because the fine-tuned 5-minute zone should be a fresh zone. If it is a tested zone, there are higher chances this zone will be violated. That is what you learned in lesson 16, when a zone can be violated. The second video in lesson 16 you learned. Okay, so this first one, the top one, and I don't have any interest. My interest is on this zone. Exactly in this zone today, we got a very good trade. See, price entered into the zone. See, exactly in the pro gap area. Prices entered We got a trade at 9:25 candle. After that, 9:30 candle, it achieved 1:3 RR. Let me show you in 1 minute time frame, you get better clarity. See, when you got the trade at 9:25 minutes candle. And when it reached 1:3 RR at 9:30 candle. In 5 minutes, you got a profit 7,575 rupees, which is 5.8% ROI, close to 6% our average intraday ROI. Maybe if you booked a little below somewhere here, you might have got 6% ROI also, you might have got, but anyway, don't be greedy when you are looking for 1:3 RR. As a beginner, I recommend, as I already recommended you in my earlier discussion, until you get 6 months experience, start booking your profits at 1:3 RR. Once you get more profits, your confidence will increase. Then you can take risk and you can aim for more targets. And don't be greedy on the first day itself. First 6 months you should feel it is a learning for you. Building the confidence is very important. Developing your trading psychology is very, very important. Don't make the mistakes made by other who are not successful in stock market. Don't get into their footsteps. Many people lost in stock market because of the greediness in the early stage of their trading. You should not be like that. You should not be greedy in the early stage. Early stage, you should look for only safe trades. You should look for minimum targets. So it gave you 1:3. After that, it moved a lot of swings, and some more down it has given you. Up to 1:4, it might have given you today. Up to 1:4 RR, it might have given you. But okay, so we booked profit at 1:3 RR. And why we are aiming for 1:3? Why not 15 minutes target, you may ask. This stock, definitely you should not aim for 15 minutes target. The reason is 15-minute zone is very, very far away from your entry zone. Here you have your 15-minute zone. Rally, base, rally. This is the area you have to, to achieve this till this, what is the RR you will be getting? 1:10 RR you have to get. 1:10 many times we got. But today, why can't we get? Because today is a bullish day. Market is moving heavily today. Lot of sentiments, emotions added into the market. Volatility is high today. That's why achieving this much, against to the market, achieving this much target is not practical. That's why overall market, based on overall market also, sometimes your decision making should be according to the market dynamics. You should change. This is how experienced people will be thinking. They don't keep fixed rules. They keep their rules flexible. Depending on the market situation, they will be changing their rules. As an experienced person, if you ask me how I behave, today I would have booked the profit, blindly I would have booked the profit at 1:3 RR, because I have seen such a huge rally in the market. When you are having such a huge rally, there are higher chances all these zones will stop out actually. But that didn't happen in this stock. It gave you profit 1:3. When it gave you 1:3, happily, actually 1:4 it gave today. 1:4 it gave, but our benchmark is at 1:3 level, and that to 1:3 RR level, it gave you close to 6% ROI. It gave very close to 5.8% it achieved. So happily we have to book the profit. Moreover, it's a very good profit. On one futures margin, it gave you 7,575 rupees profit, intraday profit. See, after that the zone is violated. If anybody would have taken a second trade, your trade would have been stopped out here. See, the second one we didn't plan a trade because we know the zone will be violated because it is a tested zone. The second 5 minutes, see, easily it is gone. So this is about Havels, and there are two more stocks stopped out. One is Reliance. Reliance is a 75 minutes high liquidity supply zone. Drop 4 base candles and drop. This is how our software identified. This one I fine-tuned with 15 minutes time frame. Say 15 minutes zone. Here you have a rally candle, you have a base candle. And after that, with a huge gap, drop candle. And when I hide that drop candle, this is a rally base. So within this 15 minutes base, again fine tuned with 5 minutes time frame. Look into the 5 minutes here. Here also rally base. See, we have a rally candle, we have a base candle. So at that base candle, we have drawn this 5 minute zone. After that, with a drop, big drop, hidden body, drop candle. And today price has entered into the zone, but it is violated. This is morning 9:15 candle, 9:15, 5 minutes candle. If it is 1 minute candle, we won't take the trade. It is not a stopped out trade if it is 1 minute, but it is not 9:15 1 minute candle. We got traded 9:16 candle. Go to 1 minute. See, this is 9:15 1 minute candle. This is 9:16 1 minute candle. 9:16 candle trade is a valid trade. Definitely you would have taken a trade here, and then with some stop buffer somewhere here, your trade is stopped out. So including the stop buffer, you got a loss in Reliance, 675 rupees loss, which is 0.6% negative ROI you would have got. Actually, first this is the trade would have been executed, Reliance. After Reliance, how else would have been executed? It would have been a successful trade. In next 5 minutes, you got the profit, 5-10 minutes. Next, you got Power Grid. Power Grid is also a stopped out trade. This is also a 75 minute supply zone. See, Power Grid, you got a trade at 11 o'clock. First of all, this is a 75 minute zone. How our software identified this zone? Software identified this as a rally. Add the hidden body here. The moment you add hidden body, it is a rally candle. You have 1, 2, 3, 4, 5, 6 base candles and a drop candle. So this is how our software identified this zone. And this 75 minute zone fine tuned with 15 minutes time frame. So 15 minutes time frame, you see here you have a drop candle, 2 base candles and a drop candle. So this is the way I have drawn the 15 minute zone. Go to the 5 minutes time frame. In the 5 minutes time frame, you have a drop candle, base candle and drop, but this is already violated in the recent time when prices crossed this zone. But in the recent time, new 5 minute zones are created inside this 15 minute zone. See, recently prices moved up to here. And here a new 15 minute zones are created. Actually 2 zones are created. This is also one 15 minute zone. Sorry, 5 minute zone. Inside 15 minutes, 5 minute supply zones. This is a rally base. Actually, medium size candle is also part of the base, but imbalance started from here. Risk management point of view, I have drawn zone like this. So that way I considered leg out continuation. Imbalance started, time is over, and next the imbalance continued. That is reflected this as a leg out candle. Generally, we keep all in base, but if you draw like this, the risk will be very high in this zone. Risk management is not possible. That's why where exactly imbalance started, that level I have drawn the zone. So this is a very good area to plan the trade. And also this is also a very good zone to plan the trade, but this zone is already tested in the last trading session. Last trading session, it gave you good profit. Wednesday, last trading session is Wednesday. Today Friday. Friday we did not plan a trade in this zone. We planned here. See, today also this zone is not easily violated. See, today once again prices went almost deep inside they went. Again they somewhat, but not good enough. Anyway, we can't plan a trade in this zone. It is a tested zone. This is the area you have to plan. So that's why I deleted this. Now you see, this is the area. And this zone is also having a very good zone. If you look into 1 minute, you will understand. See, look into the 1 minute. Prices went and sharply it pushed it down. Maybe institutions decided to violate this area. They want to consume all the supply. See, that's why there is a fight happened here. We have a rally, base, rally, the 1 minute zone. And this is the zone completely taken all these order flows. That way this zone is gone. So that is the reason why we got this zone is also stopped out. And power grid gave you 1,260 rupees loss, which is minus 1.3 ROI, negative ROI it has given. So that way we got one successful trade and two stopped out trades today. There are few more trades, the zones are violated, but they happened at morning 9:15 1 minute candle. Let's look into Max Health. Max Health is a 75 minutes high liquidity supply zone. Price did not enter. This is a drop based drop. I did not fine tune up to 5 minutes time frame. I fine tuned only 15 minutes. Why 5 minute structure is not good? Why it is not good? Let us see. Inside 75 minutes, let us go to 15 minutes. See, 15 minute structure is good. Rally, 2 base candles and drop. So within this 15 minutes area, go to the 5 minutes. See the 5 minutes candles? Rally candle, drop candle, rally candle, drop candle, no base candle. Such kind of zones will be violated easily. So that's why we didn't plan any trade in Max Health. Anyway, price also did not reach. Next one is M&M Finance. This is also a 75 minutes high liquidity zone. So this is the one. Rally, 3 base candles and a drop candle. And this one is fine tuned with 15 minutes time frame. Rally, base, drop. This is the 15 minute zone. And 5 minutes, see there is a lower time frame zone. Rally, base, drop. See here, failed ERC, rally, base, drop. This 5 minute zone is the origin for this entire 75 minute zone, and also this 15 minute zone also. This is the origin. So that's why origin definitely we can plan a trade. But today what happened? This is violated. Go to 1 minute. See morning 9:15 1 minute candle. This is 9:15 1 minute candle itself is gone. So that's why we can't plan any trade. Maybe institutions might have cancelled their order flow. That's why easily gone in the market. So this is the one of the reasons why we don't plan trades in 9:15 candle. See the huge gap up, the entire zone is gone. And next one is the Torrent Pharma. This is also a 75 minutes but demand zone. Today we didn't get any trade opportunity in this zone. Prices did not enter. But how our software identified this zone? As a failed ERC as a rally, 2 base candles and a rally candle. And this one is fine tuned with 15 minutes time frame. 15 minutes, here I have drawn drop, base, rally. This is a 15 minute zone. Previously prices entered into the 15 minute zone, but not up to the fine tuned area. Go to the 5 minutes time frame. Here you have a 5 minute zone. You have a drop, 2 base candles and a rally candle. So this is the area we planned our trade, but today we did not get any trade opportunity in that zone. Next one is TI India. This is 75 minute zone. This is also drop base rally. Our software identified this zone. Actually failed ERC. This is base rally and a 15 minute zone. Drop, base, another medium size candle, part of the base, and rally candle. This is the 15 minute zone. So inside 15 minute zone, Again I fine tuned with 5 minutes time frame. See here you have a drop candle, you have a base candle, you have a rally high explosive leg out candle. So this is the fine tuned 5 minute zone, but today prices did not reach up to that level. See, today price did not reach. Next, Indus Towers. This is a daily, this is also 75 minutes zone. This is a rally candle with hidden body. Base, sorry, not this one, here. This is a rally, base, rally. This is the 75 minute zone. This 75 minute zone is fine tuned with 15 minutes time frame. See here you have a rally, base, rally and follow through candles. And also at the distal line, before the distal line, this zone, see here you have a drop, base, rally, 15 minute zone. This 15 minute zone is the horizon for this entire 75 minute zone. Lesson 22 concept. This is drop, base, rally and follow through candle. This is the 15 minute zone, but 15 minutes you can't take trade. You should plan a fine tuned 5 minute zone. Here also fine tuned 5 minute zone. That's why I go to the 5 minutes time frame. In the 5 minutes time frame, here you have a lot of candles are taking. Here actually you have a rally, base, rally. From here it is picking the orders and again zone is getting created. All these are all medium size candles, but the horizon is here. Okay, this is medium, this is okay. You can consider rally. But this is a large candle, including wicks, body. So this is the area we planned our trade, because this is acting as an horizon, this 5 minute zone acting as an horizon to this 15 minute zone. Similarly, this horizon, we have a fine tuned zone, rally, base, rally. This rally, base, rally is again acting as an horizon to this entire 75 minute zone. Of course, it is a fine tuned 5 minute zone inside 15 minutes horizon. But this fine tuned 5 minute zone is also an horizon to this entire 75 minute zone. So this is the area, real institutional order flow is there. We have to plan our trade. But today this is violated, right? Yes. But why it is not stopped out trade? Because it is in the 9:15 1 minute candle. Go to 1 minute time frame. See, morning 9:15 candle itself. Price is closed below this zone. So that's why we can't plan any trades in this. Maybe institutions might have cancelled all their order flows from this zone. That's why easily it is gone down. Why they have cancelled? There could be their own reasons. We can't comment on that. So that's why 9:15 candle we are avoiding trades. Next one is ITC. ITC is a daily high liquidity supply zone. This is a rally, base, rally, daily zone. This one is fine tuned with 75 minutes time frame. See here in the 75 minutes, we have a drop, 2 base candles and a drop candle. Drop, base, drop. This 75 minute zone is fine tuned with 15 minutes, but 15 minutes horizon is there. 15 minutes horizon for 75 minutes fine tuned zone. See here 75 minute structure is not really good. All are large candles. This is a large candle. This is a large candle. Large candle. So but here it is having a horizon. From the horizon it picked up the orders. Drop, base, drop, 15 minute zone. But within 15 minutes again you need to fine tune with 5 minute zone. That 5 minute zone is also horizon. Actually from there it picked up the orders. So go to the 5 minutes time frame. Now look into this horizon. See here you have a rally, you have a base. See, this is the real hidden zone means, see, it is not at all looking like a leg out candle, right? But see, the moment you add the hidden body, the candle length is increasing, the candle body is also increasing from here, and entire body is coming out of the zone. Next, follow through candle. So that's why this is such kind of zones are very good, strong order flows will be there. And from this 5 minutes horizon, actually it picked up the orders and came down. Entire leg out formation, not only for 75 minute zone, this entire daily high liquidity zone, leg out formation is also formed by picking the orders from this horizon. That's why definitely new orders will be added into this zone. Next time we should not miss the trade from this horizon. But unfortunately today prices did not reach up to the zone. How else we discussed, and the last one is Exide Industries. This is a daily zone. Already we discussed this zone. Please look into the previous videos. I have explained how I fine-tuned this zone. Here a 15-minute zone is there. We did not fine-tune with 5 minutes, not proper 5 minutes horizon previously. But today, exactly from that horizon, from this zone, prices came down. But anyway, we didn't plan any 5-minute zone. It is not a valid trade for us. So this is about the high liquidity zones. And finally, as a summary, remember all the risk management, the importance of risk management in supply demand zones. Today, this month is a very good lesson for us to understand the risk management in practical way. I can't give you much better example than what I explained in today's video to make you understand the power of the risk management. Those who understand the power of the risk management, they stay in the market. Those who are greedy and don't bother about the risk management, always they will get caught in such kind of bad situations in the market. Why we didn't get caught? We are high liquidity zone traders. Maybe we didn't get enough profits what we expected. Still, we didn't get caught in this market. Why? Because of the risk management we are following. And of course, the high liquidity zone strategy is a powerful strategy. I agree, the overall statistics are impacted during this month. Sometimes any perfect strategy has to get impact. That is what happened during this month. Still, our strategy put us into a better situation, not in the worst situation. So this is what you all should understand. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.